everyone. Really pleased to have Larry Diamond, the CEO and co-founder of Zipco, here today. Zip has consistently been one of the most traded stocks on Superhero. We're going to throw a few questions from our customers, find out what's been happening at Zip over the last 12 months. Larry, how are you?
John, how are you? Good to be here.
So 2022 has started off with a bang. Some big news out this week. You've just announced a $200 million capital raise and the acquisition of Sezzle. Give us the 30-second elevator pitch.
Why Sezzle? It's been a bit of a roller coaster the last couple of months, but we're super excited about the transaction. For us it does quite a few things. One, winning in the US and showing that we can deliver sustainable growth, I think has been something the market has been looking for, and this really helps us accelerate scale, drive enhanced growth, and find a pathway to profitability faster. It also follows our coalition of founders model. So, another set of founders, Charlie and Paul, great energy, and we think together we have a really exciting proposition in the US.
Yeah, it is pretty exciting, gives a huge scale. It has been a roller coaster. Talk us through the last 12 months. You've gone from $1 to almost $15, sitting at just under $2 at the moment. I know it is a bit of an elephant in the room,
yeah.
But talk us through that roller coaster and I guess maybe some confidence around the company going forwards for our investors.
Yeah, no, it's been quite the ride, and we speak to a lot of investors, so we feel the ups and we also feel the downs, and so do our staff. I mean, we pay all our staff in stock because we want them to be business owners and be completely aligned to the future direction. So we've done our best to shield them as we go up and down, but we try and focus on the long-term fundamentals. We do think the market changed pretty quickly last year. I think we probably, as we started to see inflation move up and expectations of interest rate rises, we probably didn't think it would be as vicious and as fast as it all happened. And we've got to look at that and really reflect on it as a business. We've got a great business in Australia. It's been cash flow break even for many quarters, and it's been a cash cow for the business. We've just hired a great new MD, Cynthia Scott, who's going to be driving profitability in the Australian market. The US is actually on a very similar glide path to Australia in terms of profitability. But I think what we've seen in the market is it's telling us we probably want you to get there a little bit sooner, right? And so as a result, you've heard us over the last couple of days talk about things we're doing to move quickly. And rest of world has been very exciting, but we probably aren't getting paid enough value for the rest of world. But that's grown nicely from zero up to $50 to $60 million a month now in sort of TTV. But I can say, the staff remains committed. The long-term levers of buy now, pay later, we think are still absolutely there. We're getting, as I say, an RFP every single week from one of the big merchants over in the US. So the merchants are still demanding it. Yeah. Customers are still signing up, and we still think there's a long way to go.
Early stages.
Absolutely.
So there's some major consolidation going on in the space. I mean, you guys are consolidating the space. There's a bunch of smaller guys and some pretty massive global companies. How do you see the landscape in terms of consolidation? And I guess the big one is, do you see yourselves as a target?
Some good pointy questions there. When you have depressed share prices, companies are always targets. And I think the best defense against a target is obviously an increasing share price. So we've got to focus on the fundamentals and getting the business right. But I think for Sezzle for us was interesting because it sort of moves us being from the defense actually to the offense. That's saying, hey, we're going to take control of what's happened here. We were able to negotiate a fair price for Sezzle. They've come off significantly, and there's huge synergies from the business. So I think by us taking control, it puts us in the best place, we think, to continue our journey. And we believe, as you said earlier, there's a long way to go. I do think there's been a lot of entrants that have come into the market in Australia and other markets. We don't think there's room for thousands of buy now, pay laters, but certainly in markets like America, where huge addressable market, $5 to $6 trillion in kind of retail, do we believe that we can be one of the top 4 pure play buy now, pay laters? Absolutely, and that's a huge market. You compare the credit card companies who might have, who are the 6 largest credit card issuers in America, focused on the customer of yesterday. Buy now, pay laters, you've got the customer of tomorrow. And if we're in the top 4 in a market like America, I think we can build a huge business.
Well, you see that. You see MasterCard, Visa, American Express as those top 3 largest. Credit card spend is declining. New credit cards being issued is declining. Do you see that buy now, pay later is taking that away? Or do you see people going more towards debit cards? How do you see that payment landscape?
Yeah, I think you definitely have different segments of customers. We spoke to a bank the other day and we asked them, what's the average age of your credit card holder? And they said 52. So we're just in a completely different field. It's a different game. We're focused on a completely different customer. Our median age is about 35, so almost 20 years younger than the credit card holder. So we think we're actually targeting a totally different population, a different age bracket who is gravitating more towards debit cards and buy now, pay later versus the clunky old plastic credit card.
Yep.
And that's what we're excited about. Millennials, Gen Z, that's the future of spending over the next 10 years. And by being part of their financial life, we think we can start to own more of their everyday spend.
Now, we've seen a lot of fintechs looking to expand their ecosystem by adding in new products in. Ding has asked, what additional features and products do you have sort of up your sleeve as you move forward in 2022 and in the future to really build out that ecosystem and make Zip more competitive?
Yeah, thanks, Ding. Good question. So we obviously, to start a business, you have to solve a problem. You can't be all things to everyone, and that's why we were very specific in focusing on buy now, pay later, offering installments for whether it's a pair of shoes, you split it over a month or two, or buying a flight on Virgin for $2,000 and paying that back over 3 or 6 months interest free. So I think by doing that, we've built up a huge business, and up to about 10 million customers globally. But if you just look at Australia, for example, where we've got just over 3 million customers, now that we're relevant to them in credit and installments, what else can we give them? This year we'll be working on debit solutions. This idea that I might not be eligible for credit, or I don't want to use credit to pay for a certain product or experience. By us offering debit, we can actually start to own all of your spending. And then the other things that we want to do is help drive financial well-being and financial wealth. To do that, whether we introduce things like stock trading or crypto, which we've obviously spoken about previously, we think are absolutely relevant for our 3 million users. So we're going to start putting a lot more in the wallet. Also tracking your spending. So when you go and look at your credit card statement, you don't really know what did you spend, where did it come from, how much am I saving at the end of the month. So we want to put more brains into the wallet too. So almost think Pocketbook and Zip coming together. We're obviously looking at crypto. We surveyed our customers and many of them are interested in holding crypto, but we also don't want to be a Coinbase. We've surveyed our customers, we know our customers, and how we introduce those financial products will be done sort of our way.
Anthony asked you a question. What's been the biggest challenge in growing Zip from a small cap to where you are now, ASX 200 stock?
Thanks, Anthony. Can I call you Tony? There's probably two parts to that question, right? One is just the business itself was growing enormously inside Zip. When we listed at $20 million market cap, we probably had about 30 staff. Then we went to 100, 300, 500, and the company actually breaks as you move from these different phases. And so that required me to kind of elevate myself, work out what we need for the next phase of the journey. And so feeling the stock market doesn't see that, but inside the company, those growth pains and having to deal with that at each juncture, you could actually feel it break. And then we created new divisions, hired new people, incredible learning, right? To actually go through that. On the public markets, I think as we grow over time, it actually helped. I love the idea that someone can sign up for the product and can also buy stock, right? And I think that helped, and it's also why we have, thanks to all you guys, such a huge retail base of over 130,000 retail shareholders because of that, which I think really helped drive up the market cap over the last few years. And now we're also focused on, as we've gone global, how do we get more offshore investors to come in as the story became more global. And as part of that, the next phase now is finding investors overseas to also now join the story. And I'm spending a bit of time in the States these days, about a week a month. Obviously pitching merchants, but also talking to investors.
Rachel asked a question about competition, and with so many competitors coming into the space, particularly some of the big ones. So you've got Afterpay, Block, the big banks rolling out buy now, pay later products, and other major players like PayPal coming in. How do you sort of look at Zip in the market from a competitive point of view, and so what sets you apart?
I think, look, first and foremost, it's fantastic validation that all the banks, whether it's CBA or rumours of JP Morgan offering buy now, pay later, is just enormous validation of what we're all doing. So thank you guys. But also, they sort of wake up with these ideas 8 years after they sort of come out. So I don't think they're very zippy, and so therefore we're not really worried about them catching up. They also don't realise that a huge part of buy now pay later is actually being at checkout. We live where our customers are. So when you see the brand on the product detail page, when we're at checkout at Amazon or Microsoft, that's a very different experience to just whipping out your Combank credit card and sort of tapping it at the terminal. So I think the business model is sort of fundamentally different, and so we're not really worried about them. I think what's going to set us apart long term is number one, internally a culture that moves at speed, where we're true to the brand. We act like a startup. We ship product quickly. We're listening to customers, and we're rapidly rolling out new products and features. But I also do believe that, as we sort of touched on, there is room for a few players, right? Just like there's been room for 6 large credit card issuers in America, is there room for 5 or 6 buy now pay laters? Absolutely, because this is the customer of tomorrow, and we believe we can be one of very few pure play buy now pay later companies, and then build a long-term relationship with the customer, putting fantastic financial products in the app and being relevant to them.
You touched on being at checkout and tapping a credit card. Zip's recently rolled out, I think it's probably a year or so ago now, rolled out the ability to tap and zip at checkout. Talk us through that and how you monetize that. How does Zip generate revenue off being able to tap and go?
Yeah, the tap and zip, and for us, if you just think about both Australia and America, we actually offer this. When we were growing up and surveying our customers, one of the biggest pieces of feedback was, I love Zip, but I can't use Zip over there. We hadn't signed up a Coles or a Woolworths or something like that. And so we realized that we needed to build a hybrid model, sort of a closed loop, integrated network, and also an open loop network. And we then ended up partnering with Visa and offering virtual cards. And what we've seen is just the engagement levels. You can see in the last investor report, we used to do maybe 1 or 2 transactions a month. That's now 5 and 6 a month. So we're actually becoming a lot more relevant to our customers. And you can even see that our revenue curves are going up each year. So we're doing more revenue from our customers than we've generated in the previous years. How we make money, both in Australia and America, is as an issuer, you actually get interchange, right? And that interchange is, you get actually much more in America, much less here, 50 to sort of 200 basis points. So it kind of acts as a merchant fee. And then, of course,
not charged to the customer though.
Not charged to the customer.
The customer doesn't have any fees on it.
Correct. So 50 to 200 basis points, depending which country you're in, is basically interchange. The other big piece is, if you shop everywhere from inside the app, you can also derive affiliate income. Where merchants are happy to pay a percentage to drive new customers to them, which becomes a part of the value equation. And then in Australia, we operate more like a subscription model. So you pay your monthly fee and you get access to all these benefits. And that is what makes our model unique, is that we have a 2-sided revenue model, merchant and customer, and that really helps us, as you've seen, really maintain strong revenue margins, even with competition out there.
Larry, been great to chat. Thanks very much for coming in.
Thanks for having me.